why should we flock there and say we must have a money market fund with Avocap?
Yes, as you rightfully said, money market fund is the entry point of investing. And allow me to say this, that money market is not an investment per se, but rather more of a cash management tool. What do I mean? Money market rates move up and down depending on the change of interest rates. And these are rates that change without prior plans or long-term plan. It's if you look at money market funds, early last year we were seeing returns of north 17%. Within a year alone, we are down more than 10%. So you can imagine that goal we started talking about. You came and found out that this is the amount of money you need to get to this goal in 5 years, 10 years. And you chose money market fund as your investment choice. Then high chances are you'll not hit your goal. You'll not arrive.
Yeah.
But let me explain because it has its role. So this is an investment that is very low risk. It has low exposures because of the underlying assets. And these are the T-bills, the T-bonds that are less than 18 months, and these are some commercial papers. Liquid or near liquid assets. Again, also cash deposit. So our Avocap money market fund is unique because, one, it's not only a low entry which has 3,000 shillings as a minimum initial investment, but also it offers you wallets. This is a key unique feature with Avocap's money market fund. I don't think there is any other in the country. And what are wallets? So you realize that you have a lot of short-term goals that you want to meet or you want to put money aside for. Short-term goals are like, today we are in July and you want to take your family for holiday in December. That's a short-term goal. You want to buy a phone, maybe within the next 3, 4, 5 months. That's a short-term goal. There is school fees, that the third term is coming. So maybe you want somewhere you can put your money for school fees. That's another short-term goal, and such like. So you can come to our wallet and open a wallet for every goal. Even have a goal. There's a client who told me they have a goal for shop retail therapy. For those who understand what that is, that's the money they put aside to spoil themselves without guilt. Because again, remember, if you don't plan, you might even end up feeling guilty for spending over something that you should be spending on. So our money market funds give you that provision of creating a wallet and putting a goal up to as many goals as you can. Not only do we allow you to put a goal, there is one key trait that investors need to have: discipline, which lacks a lot. And you'll find people using even money market funds as a current account. Even paying, you're in the supermarket, you just pull up your phone, pay from your money market fund. So how have we instilled discipline in this fund? You can open a wallet and say, holiday, to take my family for holiday in Mombasa. It will cost me X amount, let's say 200,000. Today I have 50,000. I'll put in that wallet and lock it. It will only unlock when I hit that amount or when that goal materializes. So what does that mean? You're forcing yourself to arrive to your goal. Remember, we said investments are bridges. So this is that bridge. Again, our money market funds can be used to level up. So you have come to our investment portfolio or offering. You have found out that Almasi, for you to invest in Almasi, you need 100,000, but you don't have 100,000 right now. What do? You start off with money market fund. You put the little money you have there. You pile it up. When it reaches 100,000, you can withdraw from money market and invest in Almasi, for example, or any other of the funds. Another thing is, say, project management. You'll find project managers or developers. they have a huge amount of money that is not going to be deployed into the project one-off. So money market is another tool where you can put in your bulk amount of money, prepare your withdrawal or your schedule, and then be recalling or withdrawing money whenever it falls due. With our money market fund, within 24 hours, you have your money. So if it's something you need to pay tomorrow, you can recall your money today. So that's another tool that can be used. That's another way money market fund can be used. And you'll end up earning, maybe it may sound small coins, but at least you're not incurring a cost like you would maybe in a current account where even any transaction you're incurring a cost. Yeah.
Amazing. So money market fund is a parking fund.
Yes.
So there's controversy about money market funds. Some people say it's an investment because when you compare with other investments in the market, especially last year when we had the 15 plus, but we know that on average over 10 years, 8 to 10%.
Yeah.
So this is why you need to keep your short-term cash.
Exactly.
Then you inject into other goals that you have.
But even Alex, when those rates are that high, you take advantage of that. You put your money in the money market fund. But remember, we said it's a cash management. So you're managing your cash at that point to earn the high returns. Then when the returns start going down, and that's why you can see right now, there's a lot of withdrawals from money market funds because now clients are looking for a better return. So it's playing its role.
Amazing, amazing. So you take advantage when the rates are high.
Yes.
Then you exit.
Yes.
And guys, money market funds are like bank accounts. You don't have to have one money market fund account. I usually say at least have 3. 1 for your emergency fund, which is very critical. 2 for the sinking fund. Sinking fund is where you put short-term goals like you are paying for your child's education next month. You are going for the holiday, the therapy you are talking about, right?
Yeah.
Money that you be accessing, that is a very good place.
Yes.
Then you spoke about where you accumulate your investment cash.
Yes.
If we have investment that require a bit of cash to get into, you can have a different money market fund where you accumulate that money, then you push it there. So at least 3 money market fund. So there's no excuse to say that, oh, I have a money market fund. Now I won't go to Avocap and experience the benefits that Monica spoke about. Right, thank you for that. Now, Wilson, I want us now to go into another area that is a bit difficult to comprehend, right? Let's look into Africa Equity Fund, right? Then the Money Fund and Avocap Multi-Asset Strategy Special Fund. These funds look complex. We are not used to them. We are used to trading bonds. Almasi, when you talked about bond trading, I think that's a new concept for us because we believe you invest in bond, then you wait for the semi-annual coupons, right? So what is making these funds special and how are you able to give us that return?
Equities market. Over the last few years, our local stock market has not performed really well. I think if you do an aggregate return from 2015 to 2022, 2023, some portfolios were down for 50%. And there was a time when the equity market was the main investment vehicle for a lot of portfolios, especially when we had the buzz of IPOs back in the 2000s and such. But there was a period whereby, because of sentiments in the market, the equity markets have not done well. But then we realized there's opportunities to actually create value for clients within these equity markets. Because one thing we realized was that there was deficiency of professional advice to clients who are looking to participate in the equities market. The other thing we realized was that as investors are active looking for funds, they are active managing their businesses, they are active or working on the jobs in their careers, then they don't have the time to actually follow up what is happening on certain counters. What did the CEO say? What did the CFO say? What what does the new capex or capital expenditure mean? How will it affect my future returns? Is it a good thing for me or a bad thing for me? So there was a deficiency of these active professional advice and actually also active management of these investors' portfolios in the shares market or in the stock market. And so that's where our equity funds comes to bridge that gap. That for investors who are looking to participate in the stock market, then our equity funds gives you a platform for you to have your funds actively managed. You have a team of professional advisors, research analysts, who are actively every day following up on what's happening in the stock market to manage risk, manage volatility, and also to take the advantage of the opportunities that the market gives. And let me tell you, Alex, once you deep dive in the stock market, you realize there's numerous opportunities. And a lot of investors actually miss these opportunities because, one, as I said, sentiments. And at times, even when sentiments are changing, a lot of investors miss that wave. If you look at the Kenyan stock market, last year was a very good performing year. The NSE 25 index was up that 5%. The All-Share index was up 43%. This year, the NSE is up. The All-Share index is up. If you look at some of the counters are up quite significantly. Last year, you were trading Safaricom at 18 shillings. Now it's at 27 shillings. And so investors who are out of the stock market may not realize when these opportunities are beckoning. But now with our equity funds, we give them a platform, okay, to actually participate in these. And for them, they can rest easy at their homes, knowing there's a team of professionals who are actively looking at these portfolios on their behalf. And for us, how we do and how we have managed to deliver these decent and beautiful returns on our equity portfolios. It's through these active strategies from the research committee, the investment councils, the investment committee, analyzing everything that's happening within the marketplace, within our universe of investment counters that we are looking at. Establishing, our entry points and where to exit and all that. And through this active management of these portfolios, always be in the market looking for these opportunities. That's how we managed to deliver these decent returns. And for us, we believe we are here to make it great for investors to invest in the stock market. Wow. You don't have to fear it. There are a team of professionals doing it for you.
Amazing. Most people are a bit skeptical about share trading. You remember during Safaricom, we went there and bought the share at 5 shillings. Then after a few weeks, up to 2 point something, and people panicked, right? So people have been shying away from investing in the stock market. And that is why some people will even ask, does Avocap help us buy shares in the market, right? And who is this person who should be investing in these equity funds, right? What goals? At what level? Do I come and invest in an equity fund without a money market fund or without an almasi fund, right? I've just heard about investing and I've downloaded your app on a 53%. This is what I'm going to start with, right? What advice? What goal should we look up before investing in equity funds?
There's a beautiful thing that Priyanka likes speaking about, portfolios. I know she speaks about it. And building portfolios. And taking clients through the act of building a portfolio. And when you speak about building portfolios, because our CEO told us, let's try to break this thing as simple as possible. When you speak about building a portfolio and building your goal, you have identified you have short-term goals. And for your short-term goals, the best product to pair with is your money market fund, good for short-term goals. You have your medium to long-term goals. Okay? And in those medium to long-term goals, you have identified one product that can fit into that, which is your almasi fund that Priyanka spoke about. But then at the same time, we have what we call accelerators to your goals. And that's the beauty about the equity funds. When you speak about the risk level, Because now the other question is, client will say that, but I don't have the risk appetite to invest in shares. Today the share price is up, tomorrow is down. And that's where now the portfolio building aspect comes into play. That will help you and guide you that, let me just take an example of an investor Z who is coming to invest Kenyan shillings 1 million. They have 1 million they want to buy, and they're like, do I buy the best performing fund or do I just buy the money market? From one extreme edge to the other extreme edge in terms of, But when you go through, either you speak to a wealth advisor or you go through the wealth, the flowchart, the product identifier flowchart on our website, then we can help you pair your goal. That you actually identify that out of this 1 million, is this 200,000 that I actually need to utilize in the next few months. So for that, money market. Then let me also build now the Almasi fund. Probably you're putting an additional 500,000 on the Almasi fund to help you work towards now this long-term, medium to long-term goal that you have. But then you see now you already have a 70% more of a low-risk portfolio, giving you decent return, low risk. Now that's why now you're building now to your stock fund, because they become accelerators to your underlying income portfolio. Yeah. That you'll see now the rest of the 300,000, I will divide it between probably Africa equity, the money equity, or I'll probably even do a currency diversification. So for us, it's about that aspect of helping you as you work towards your goal. We are giving you a cushion that if anything, when market volatility or turmoil, you have a cushion through your fixed income funds. But then on the other side, we are giving you accelerator funds, your equity funds. They help you accelerate faster towards your goals because in a long-term basis, they tend to outperform. It's Warren Buffett who says that in a long-term basis, the equities market will always outperform, the bonds portfolio. Mm-hmm. So equity funds, we find that even in the short term, they may be a bit, share price imetoka 27, imerudi 24. Mm-hmm. There's a bit of volatility here and there in the equity markets that expected. But when you look at it in terms of a long term, the 3 to 4, 5 years period, they tend to outperform these other portfolios. So they become very good accelerators in portfolio.
Amazing. Priyanka, I want to ask you probably regarding that. Or Wilson, gives us some more tips. Now, first you must have a good risk appetite. Is the next level wealth acceleration. Now, for these stocks, we have different funds. Are you only investing in local funds, our Nairobi Security Exchange, or they are global funds? Case equity area.
Yeah. Our 10 funds are divided into 3 kind of locations, geographies. So we have local funds, we have an African fund, and we have global funds. So when it comes to our equity funds, our first global fund is the African Equity Fund. This is denominated in South African rand. Minimum investment is 15,000 rand, which comes up to about 100,000 shillings. It invests in 9 stock exchanges across Africa. And it gave a return of 56% in the last 13 months since inception. And I'll let Wilson speak more on that. And go to the next one.
All right. Also, Wilson, as you take that question, tell us, you have 2 equity funds. We are confused.
They're actually 3.
They are 3. Yeah. You're going to tell us the third one, which is a USD one.
Yes.
And now the South Africa Rand, and now the Kenya Shillings Fund. We are confused. There are too many choices. Which is which?
Now, beauty about diversification. And this one we speak to the returns that you have managed, the 6% that Priyanka has spoken about. That for us, we studied markets. We studied the investor appetite of the products. And from our investor, or the investor that we studied, we saw that it's an investor who is looking to participate in the equities market. However, there are limitations to our local markets in terms of the number of shares you can do to create a portfolio. Also, even the number of sectors. So that our market is a bit highly dominated by finance sectors, or the financial sector, and telco. Basically, telco is just one telco. So how do we help investors who are looking to better manage their portfolios, to better manage their risk, to invest in the equities market by giving them more sectors? And that's where now the African Equities Fund came in. Because now the African Equities Fund gives us not only the financial and the telecom sectors here, gives us a wider breadth of those sector in that sector itself. Here we have just one telco. In the African market, you have almost 7 listed telcos that you can invest in. So basically, there is more opportunities for us to be more finance on how to invest into those into that sector. But then, in terms of now sector-wise, further now we have mining sector. We have chemical sectors. These are sectors that have, if you look at the performance the last 1 year, have outperformed, not only in Africa, but across the globe. As everything is happening across the world, global tensions here and there, trade tariffs, and people push to safe haven. So meaning some of the, what you call the gold and the PGM stock have performed very well. Your gold miners did very well. So mining sector has performed very well. But then after that, this is a bit about diversification and what we're helping clients achieve with the Africa Equities Fund. Because we had gold being a leader in the first quarter, but then as the rhetoric about tariff started abating, now there's more focus on to moving now towards global industrialization and picking up, into global economic growth. Then now there's industrial capacity. And so now there's higher demand of industrial metals, or metals that will help accelerate towards that. Your palladium, your platinum have done very well. So for us now, we all have exposure to that through some of our African counters that we hold. That as gold take a pause, then palladium, platinum are taking the lead. So the palladium, platinum mining sectors taken the lead in this Q2 and Q2, Q3 now. And so that's the beauty about what the Africa Equities Fund helps us to achieve. And that's the beauty about this fund, that it allows us to move beyond these normal sectors to actually the other sectors that are listed in other markets that probably, we are not a big mining country, so probably may not have exposure to most of these. We are not big also in petrochemicals, so we may not have a good exposure into that. But other African countries are quite big in this. And so the African Equities Fund helps us achieve that. And by us, actively, as I said, our research team, our investment team, always looking for these opportunities. We managed to deliver the 56% return. We believe there are still a lot of opportunities within this market. Still, every day we see great opportunities, great companies across Africa to invest into. We keep on doing the DD in each of these to see whether they fit within our universe, then within our portfolio, so that we can invest into them. So been a great thing.
Yeah.
And great opportunities.
That's one of the 3 global funds that we have. The second global fund is our Global Equity Fund. It's denominated in dollars, and it invests in high-value stocks. The minimum investment is $1,000, and it gave a return of 19.8% in the last 13 months. So CIO, take it away.
Wow. So the same thing. When you come to the global markets, now we are speaking about a very wide universe. Speaking about MSI index, 3,400 listed companies across the globe. And so it also gives us a better opportunities in a bigger universe for us to even finance our investment strategy even further. So our Global Equities Fund is a high-value fund to invest in high-value global companies that have great moats or have great economic advantages. They have control of pricing. They have great margins in their businesses. They have great cash flow, generating capacity. So these are companies that can withstand various economic cycles And so the global equities fund for us, we look at it as this high value global stocks portfolio that we can finance more onto businesses that basically will looking at we do a 5-year, 7-year projection. Will actually have great growth, even in terms of revenues, expectations, and all that. And so out of that, we've managed to choose a very good portfolio of investment companies, 18 companies to be invested into. I have a great exposure into them. And these are businesses we are happy to own for a very long period of time. So I think this is one fund that I would say for a longer period, as they say, medium to long term, I think this is a fund to be invested in. And it's a fund to have an exposure in. I believe will highly outperform, in a medium to long term strategy.
Amazing. Is there any other?
Yes.
Which
The third global equity global fund is our multi-asset strategy fund. It's denominated in dollars. Again, minimum investment is $1,000, and it gave a return of 41% in the last 13 months on the dollar. It's a global themes fund, and I'll let Wilson speak more on that too.
Global themes. There are a few multi-asset strategy funds in the market, but why Avocap multi-asset strategy fund? That means it's a global thematic fund. So our investment strategy in this fund is we identify global themes, we studied the markets, and we realized that every now and then, capital follows a certain trend. It's like a river. Follows, the river will always go back to its course. So that means that now we have found that capital follows a certain trend. So how do we help investors identify these trends and get an exposure or be invested in these? From your AI themes, from your EV to your healthcare themes. Now if we speak about healthcare, we're speaking about weight loss. So that's a theme within the healthcare sector. We are speaking about biotech. So how do we help clients invest in these global themes that by themselves, even choosing which is the best AI counter to be invested in, may become a problem, which will be the leader within this AI space. Then going in depth and looking at in terms of not only the market leaders, but other auxiliary industries that are benefiting from these. And so commodities that are being influenced by these global themes. When we speak about geopolitics, energy, and the energy commodity sector, getting an exposure into that. When we speak about currencies, we've seen investors try to trade currencies, forex. And most people say, I've seen some billboards somewhere in town that 95% of investors lose money in currency or in forex. So because you're investing without, you're just trying to tame the market. But for us, by studying markets and studying the macro policies influencing currency movements, we can help investors or we can get exposure to these currencies in a more of a long-term trading perspective. So that's the beauty about our multi-asset strategy theme as a global thematic theme. It's a fund that has done quite well. We still believe there's so many themes that keep on, every now and then based on either geopolitics, based on policy, that probably tax policy, CBK, or central banks policy, fiscal policies and such. So new themes emerge, themes fade away. So for us, our team is always to be on point and to be active in the markets, looking for these new themes, helping us get exposure earlier on, but also helping us exit themes before they fade away. So that's the beauty about multi-asset. I think it's one of the most exciting funds for us, quite an exciting fund. As you go through all these themes, and so it's still for a client, it's good and suitable for clients who are looking for that alpha return in their portfolio. You have built your portfolio, you did your money market, you did your almasi, okay? You are 50-60% in that nice base foundation. I call it a foundation, strong foundation. You went to your equity funds to get a bit of now accelerator. But then now you're looking for that alpha on top of your returns. So that's where the multi-asset strategy fund comes in. It's that gives you that alpha return. That gives you exposure to these beautiful global themes. Okay? So that's how you fit your multi-asset in your portfolio. So, yeah.
Amazing, yeah. Because we have been used to, we call them specialized funds. They are free in the market, but the type of return they are giving compared to what you're offering, what you give for the 1 year, quite a huge gap. You're wondering, so you guys, you're investing and you're giving us this return. And these guys are also able to invest and give us such good returns. But I like it, you have explained what you're doing and your investment strategy. Now, what are the risks? In terms of equity fund and the multi-asset fund, what are the risks?
When you speak about risk, this is a question I would want to pose to our investors and to our listeners out there. Between these two things, price and liquidity. And so liquidity is basically your ability to buy into or sell out of a certain asset. So which would you consider your biggest risk? Now, for me as an investor, price, I look at it in terms of market volatility. Madam CEO spoke about price moving up and down. And basically, the nature of stock prices or the nature of prices of goods and services in an open free market, they always move up and down. There'll be demand, high demand, prices are moving up. Then at a point, people are taking profits, so there's oversupply, prices get depressed and all that. So for us, that's a risk that you can control or you can help mitigate. Why? Part of our strategy is we define a margin of safety. That when you're investing in an equity, when you buy a certain stock, when you buy a certain commodity, what is our entry level? We have our fundamental analyst, research analyst. We do now the fundamental analysis. That is expected revenue growth, this is the cash flows, this is the valuation. So it's undervalued or overvalued at this price point. We have our quantitative research analyst who just basically run those numbers to tell us that at this price point, is it a good buy or not? So they do the maths. So they are the math nerds. The quant nerds will do the maths and tell us that at this price, it's a good buy or it's not a good buy. Or based on certain trade. So now we bring in the technical analyst, tell us that it's a good buy, but the trade now, sentiments are negative. Everything is coming down. It may be a good price to buy into, but based on sentiments, probably not a good price to buy. So you see now those you can control, or through our defined margin of safety, we manage that risk in terms of price volatility. Then your stop loss and also your take profit. So that one helps mitigate that risk. The other risk is liquidity. For me, that's a bigger risk. That if I have 10 million shares in the portfolio and I want to exit because sentiments are changing or things are going negative, it's time to exit this portfolio. How easily can I get out of that? And so for us, when you're analyzing the investments you want to get into, our first thing is liquidity analysis. We dig deeper into how easy and what's the liquidity pool. If we are giving these 5 or 2% of our portfolio, in terms of liquidity, what does that mean? And how will that influence if you are to either buy into or get out? Because there are stocks that you try to buy 10 million shares and you're moving the stock price with 20% just for you to get those. The other stocks that you basically barely, let me give an example. If you are trying to buy 10 million shares of Safaricom, people are going to move the stock a cent because there's that much liquidity. So for us, our exposure and where our funds are invested into, all our equity funds, and even where you look at where our exposure is, it's in highly liquid markets. So that one helps mitigate that huge risk on liquidity. And then, as I said, in terms of market price risk, market volatility gives us great opportunities to re-enter. When the times price comes down, it's a very good opportunity for us to re-enter some things that we probably would not have bought at higher prices. But how we mitigate that is by active analysis and defining our margin of safety to guide our entry, take profit, and stop loss.
Amazing. So out of 5, 1 to 5, what is the risk level? We might, as layman's investors, Fund managers are used to telling us out of 10, out of 5, this fund is at risk 3, this one is 1, the other one is 4, right? Where can you categorize the equity funds and then the multi-asset fund and Avocap fund?
We have a document called Key Investor Information Document on our website. It's also on the client portal. There's and even actually at view. When you view on each fund, the key investor information document is there. You can download it, or you can view it from the application. Defines the risk level of each fund. We categorize our risk from 1 to 7. Your money market fund, as the Madam CEO said, it's your low risk. It's 1. Then you have your Almasi and your Gao funds as low risk funds, and your Eurofix as medium term or basically medium risk fund. Then when you come now just above medium risk is now where you find your equity funds. Then our higher risk is the multi-asset strategy fund. And as you have heard the conversation tonight, I was quite, even when saying that your foundation will be your fixed income funds, because they are low risk. Okay. Then from there now you add onto these others, the accelerators, the equity funds. They're a bit of a high risk. And why do we speak? When it's times when you speak about risk, times we may make it sound like it's a red button, don't touch, to investors.
Yeah.
When you speak about that, your equity funds are above medium risk. What you're speaking about is terms of price volatility. Okay. That in the short term, for your equity funds, the price may move against your entry point. You may buy a counter now at 25 shillings, just because of some certain news or expectations. They didn't meet certain expectations. We have seen in markets whereby clients or investors were expecting the earnings per share to be 5 shillings. But then they delivered 4.9. Previous year, earnings per share was 4 shillings. There's a growth, right? Last year it was 4. Expectations was 5. They have delivered 4.9. There was growth. But because of these missed expectations, then the price comes down, right? Doesn't mean it was a bad investment. Just means that the price volatility will affect you in the short term. That's why we say that now, the way to, as an investor, to look beyond that volatility is in terms of identifying. That's why we speak about your equity funds being your medium to long-term goals kind of funds. Not the fund for day-to-day, because the change, how much have I gained today, how much have I lost today, how much have I gained this month, how much have I lost this month. If the underlying fundamentals of a business are strong, as I said, we look at growth, gross margins, the growth in that, the cash flows, the ability to pay, the leverage, the ability to repay the debts of that business and such. If the fundamentals are strong, then the short-term price volatility should not actually affect you. But because it means that in that short term there may be that movement of prices, more movement in prices, that's why it classifies them as more of a medium or higher above medium in terms of risk. So it's more of price volatility. It's times of understanding the underlying nature of the asset. So it doesn't mean that it's red, don't touch, very risky. No. Means that in your portfolio, just look at it more as your medium to long-term portfolio. With that now, whatever happens in this short term won't affect your investment mindset about that.
Absolutely. As they say, no risk, no return, right?
Exactly.
Yeah, no risk, no return. So let me go to Monica now. There's this fund called Avocap Gao Fixed Income Fund, Distribution Fixed Income Fund.
Yes.
Who is it for? Right.
Thank you. Avocap Gao Fixed Income Fund. This is a fund, as I earlier said, we've been in the markets for quite some time. And I, as a bond dealer for more than 15 years, I could see investors coming into the market to buy government bonds and mostly infrastructure bonds, laddering them so that they can be able to have coupons every month. So this bond is for those people. You realize the amount of time and maths you need to do to balance, to ensure that you have an amount coming every month. So a bond pays coupon twice a year. So there are 12 months. So you need 6 bonds to have a coupon coming every month. Some months, some bonds have lower coupons than others. So it means on those 2 months, that bond you need to invest higher than you will invest in others. So you're seeing the maths that we are doing. Bonds redeem, especially the infrastructure bonds. So upon redemption, your maths is messed up. So there's a month that you are expecting, you used to receive this amount of money, the bond has redeemed, you've been paid back your money, you're like, what do I do with this money? And yet I need to sustain my income flowing, my cash flow flowing. So this bond is for those people who try to ladder, because Avocap Ngao Fixed Income Fund is where you invest a lump sum and then you start earning an income immediately. You choose your frequency, either monthly, quarterly, semi-annual, or annually. And this amount is constant. So it's not like the other option where this month you have a high income, the other month you have a lower income. Also, this is a bond for those we call it this industry where people don't have an income every month, and where you get either a tender and you're paid a lump sum, or you're in the gig space where you earn on contracts, you have gotten a big gig, you've earned a huge amount of money. How do you ensure that you remain with cash flows? Because we keep saying cash flow is king. So you want to run your life on a daily basis or a monthly basis, pay your bills. So this is that fund where you will come and put that lump sum, and you know that now, come what may, every month I have an income. So you're able now to focus on to the next big deal. Another class of investors that need this investment are the retirees. So you've retired and you've been given your gratuity. Where do you put this money? Because you're given a lump sum, and you want this money to sustain you for the rest of your life that you are there. So this fund, you bring in your lump sum amount and it's able to pay you a monthly income. This fund also has capital preservation, because once you put your amount, it is locked, it is safe. It's not compounding, it's not being invested, it's not trading, so your capital is preserved. But there is an income coming every month. So upon any change of need of this income, you're able to quickly withdraw the money and deploy it into another field. And so this creates generational wealth. Because remember, if you retired and this is the only money you are given, maybe this is the only inheritance you have for your loved ones or for your kids or for your grandchildren, you can put this money there. It sustains you for now that you need it. In your absence, the wealth is there. This is also a fund for, we can say, which are the investors? The ones who are looking for just ensuring that you have an income coming every other time. So this is for them. Again, even business people who have heavy output or needs at a specific time of month. There is a businessman I was talking with, and he told me that towards the end of the year, he has heavy insurance payouts that he needs to cater, and they really mess up his cash flows. So if he will be able to solve this, then his problems will be in business will be okay. So he's able to put in a lump sum amount, and this pays an annual payout. So this annual payout will be able to sort out a certain expense that this client has. So that's Ngao. Again, for those people who are in diaspora, working abroad, they have beneficiaries here, or parents, or their families are here. Or even, I remember working with a certain family who told me that they take monthly turns to cater for their mom back in the village. and everyone contributes. This is your month now. It's your time to pay 10K. Umetuma. And the other one, you're the one. And there's even someone who is the prefect to ensure you have sent. So this fund is for them. Because what we'll do, we will need to identify who is this, what is the amount of money that is needed. Say 10,000. So how much do we need to put in today with Avocap so that every month this money goes to mom at home? The other great feature about Ngao is that you can add beneficiaries. So you can be able to say, I'm investing this money today. It's my investment, but I want my mom to be paid. So every 9th of the month, an M-Pesa message will get to your mom, with or without calling Avocap, have you sent, automatic. If it's quarterly, let's say it's school fees you're working on, you want to ensure that every quarter you have this amount of money, that this is the average amount I pay on school fees, you can actually choose a quarterly package whereby every quarter you'll receive this amount. For those who are having 3 terms, on the 4th term, so you eat that money, you say, this holiday for my family. So that's Ngao Fund for you, yeah.
Tomorrow is payday.
And tomorrow is payday
for the
for
Gao
Ngao.
investors, the monthly and the quarterly.
Yeah,
Wow, okay.
It's your shield.
yes.
Gao means shield.
Gao means shield. And by design and by purpose, it's designed to be the shield for that investor. That there are these periodic payments I make. If they are taken care of,
Yeah.
I rest easy and I
Yeah.
can concentrate on other investments
Other
within
investments.
myself. Gao is your fund.
Yeah.
It's your shield.
Wow.
And we do have calculators on our website that can help you simulate on how much do I need to invest to get a certain payout. Or if I invested this amount of money, what's the payout I will get? So that one you can check it out on our website on calculators module.
That's amazing. That's amazing. One of the most interesting things is I usually talk about passive income on platform,
Yeah.
and I help people create this passive income. That is what we call financial freedom. You know what Warren Buffett stated, that if you don't find a way to make money when you'll forever work until you die. You'll work until you die, typically.
Yeah.
So all other funds are supposed to help you accumulate the cash.
Yeah.
Then when you get there, when you hit your goal, now you can put it in a distribution fund.
Yes.
And then you enjoy your passive income.
Indeed.
And I like what you have said about the diaspora people. Remember, they usually send money home.
Yes.
Now, one thing that you can achieve your financial freedom so that you don't carry this burden of giving to your people, create a lump sum that you can put into that fund. And Monica and the team will be distributing that money. You'll never have to think about it, like forever.
Yeah.
And after all is said and done, the money is still yours.
It's still
right?
yours. It's
Still
still
back
yours.
to you.
Yes.
100%.
And you can use the Almasi to build towards that amount.
Towards
Yeah, because once you realize you need this lump sum and you don't have it, you now come to Almasi. You start building on Almasi. When it reaches that amount, then you're able to put it in Ngao. Yeah.
Amazing,
Yeah.
amazing. We were used to annuities in retirement. Yeah,
Yeah.
that is through insurance companies. Then bond laundering
Yes.
as a sure bet that now we know our capital is preserved and we are guaranteed to have that cash. There's something I usually tell my people, that you can create different passive income trees.
Yeah.
You have said for education, you accumulate an amount and that will serve as an education fund for all your children. You're just getting passive income. There is an annual distribution.
And
right?
once they are done, you can turn it to be my grandchildren will also. So basically,
Yeah.
you have created generational wealth.
Generational wealth.
Yes.
And then now Priyanka is there to manage your family office.
Yeah.
It's very simple.
Yeah.
Yeah, it's a cocktail of products. It's a cocktail of products. Even the holiday management.
Yeah.
You don't have to be saving money for the holiday. I usually say you can take a 5-year holiday. Okay, I'm not going for any holiday in these 5 years, but I will accumulate a fund that when I put it in such a fund, in such a Gao fund, every quarter or every is giving me enough money to go for the holiday. That means that money will be there. I'll never have to think about going for a holiday ever
Yeah.
again.
Yeah.
That is amazing. That is
Holidays
amazing.
are guaranteed.
Yes, holiday becomes
The holidays,
guaranteed.
yeah, indeed,
And the capital is
is
preserved.
preserved.
Capital
Yeah,
is preserved.
yeah.
Just one highlight. There's something that people usually confuse. Capital preservation and capital guarantee. You guys guarantee or do you preserve? Shed some light on
Okay,
that.
okay. Let me take that question. When it comes to guaranteeing, I doubt there's any fund manager out there who will tell you that we guarantee. After all, even the authority does not has prohibited us from using such terminologies as guarantee to investors. But this is a moment where we help you in diversification, because this is the solution to what you're looking at. As you have heard from the equity and multi-asset strategy funds that my colleagues mentioned, which are wealth builders by themselves, and the Almasi and Ngao and money market fund that we have also tackled, which are low risk but accumulators, then by blending these two sort of products, then you're able to achieve what we are calling capital preservation. Again, capital preservation is a strategy we use as a firm. Investments desk uses, in whatever he has mentioned, the risk management framework, as you have gotten a sneak preview of what it is. You can hear there's a lot we are putting in place to preserve, to ensure that the investors' capital is not exposed carelessly or recklessly to risk. So when we manage risk, actually, CIO tells me I wake up in the morning to manage risk. And when you manage risks, as we say, then the returns just float upwards. A fund like Africa Equity Fund is a fund that shocked us when we got to see the returns it's giving, because we were not there to chase this return. We were there to manage risks and taking opportunities in the markets. Then this is the return that appeared. And as you know, in the CIS, this is the unit trust framework. You disclose and distribute everything you have earned in the fund to the unit holders. So that's exactly what we did. So when it comes to guaranteeing, that's the strategy I would want investors to look at. Because when you are talking about guarantee, it's like you're asking what is the risk involved, and that's a question you asked. And so when you understand the risk profile of every investment you're taking on, then we come in and help you with mapping your investment into a portfolio that is balanced. Then your question will not be whether capital is guaranteed or not. Your question will be, how am I working towards my goals? How am I getting there? Yeah.
Right, amazing. We are in safe hands, right?
Yes, you are.
Yeah, because that guarantee aspect is quite, people don't really understand it. I usually say this: if a fund is giving you a return of more than 1%, your capital is still, right?
Yes.
So if you're giving us a return of 20, 30%, and we are here, thinking about capital preservation, you're not yet there. We could be debating about that when you see you touching one figure, 7, 6, right?
Yes.
So as long as a fund is giving you a positive return, your capital is okay. Capital is okay. All right, one more thing that I was told to come and ask you. All these funds, 100,000 minimum deposit, right? Then there is a fixed period of 6 months. There's one question that people ask. Probably, Priyanka, you are going to answer that. Yeah? In this 6 months period, I have invested 100, that's the minimum, but I keep on topping up. Does the top up still, go for, is it still fixed for the 6 months? Or once you start the fund, you give it 6 months, then after that, the fund is open. Another thing is, why the 100,000? People are tired putting money in a money market fund and they are missing this return as they accumulate it. Can we go to 50? Right?
Okay, those are good questions. A lock-in period is basically the period in which your funds are locked and you can't withdraw. Our lock-in period is 6 months from the first initial payment. From your first initial investment is a 6-month lock-in period. So if you keep a timeline, a simple timeline of Jan to December, and you've invested 1 million on 1st Jan, that means 1st July, it's unlocked, which means you can now withdraw it. You can withdraw part of it, full, or nothing at all. If you don't withdraw anything, it still accumulates the return that the fund is giving. Now back to our timeline. Let's say in Feb you invested 2 million, which is now a top up. That still also means that your lock-in period will end on 1st July. And after it opens, it's open for the entirety of your investment horizon. Yeah. Regarding the minimum investments, our shilling funds are 100,000 shillings minimum investment. Dollar is $1,000 and ZAR is 15,000 rand. But this is all except the money market fund. Our money market fund initial investment is 3,000 shillings with top-ups of 1,000. And that's why we've kept that so low as well, is to help accumulate your funds in the money market to then get more opportunities and invest in the rest of our 9 funds.
Yeah, and maybe just to mention, we said that our strategy is wealth management. So here we are coming in, helping you to level up. So if you're not at 100,000, let's help you grow towards 100,000. At least you'll be saying, that's my first goal that I've hit. You get? Again, just looking around the markets, I think you will agree with me that our funds have among the lower minimum. I know some funds around have higher minimums. And so we feel that ours are still on the lower side, still trying to help investors catch up with the funds you're saying, the sweetness of investing. Yeah.
You have to make us keep on chasing the goal.
Yes, indeed.
Even continuous contribution.
Yes.
There's also beauty in realizing, I've seen a lot of investors, the moment they hit the 100,000 and they can level up to Almasi, basically the joy that I committed myself, I'll be saving 1,000 every day, I'll be saving this and this. We like giving these example, which has now grown. That one of our greatest clients, who started with us in June last year, in the motorcycle or border business. And once he enjoyed that leveling up and topping up to 100,000, moved to Almasi and all that, like a good disciple, he went out there and spoke to his colleagues.
Yeah.
And so one of our biggest beautiful clientele base we have is actually the border guys,
borders, yeah.
who every day, whatever they make, they put into their money market.
Yeah.
Ikifika 100,000,
They push
They
it to
convert.
they push it to.
Yeah.
You can imagine now the discipline and you can see and how they do it, the synchronicity in which they do it as a group for them to chase and achieve their dreams. So our products, as she has said, it's to help everyone have a platform to play. Doesn't matter where you start from. Your starting point may be the 3,000 and build up to 100,000. Some starting point is they want to put in that a million, 10 million or such. But whatever your starting point is, we're here to work you your journey of building.
Wow, that's great. So you think that even a group, a chama, they have an opportunity to invest in.
Yeah.
100%.
Right?
We have a lot of investment groups or chamas who come together. And chamas, if not taken care of, they may end up just being a savings corner or where they just do merry-go-round. But when they start understanding what opportunities are out here that they can use to create wealth, then this is usually a game changer. Remember, as a group, you're able to bite risk better. So the funds we were talking about, and we said they're wealth builders. These are good opportunities and good funds for chamas because they'll take on to them. our CIO is emphasizing on the duration of investment. You'll find some of these chamas have been existing for more than even 10 years. I mean, one that has more than 20 years. But these are vehicles that can be used to take on some of these special funds. And so I am usually quite, I wouldn't say sad, but let me say sad because now I know of chamas who put money in money market funds.
Worst of it, there are people who put it in a bank account.
Or in a bank account.
No, that's why.
Yeah. So there are opportunities for them
Right.
to grow wealth. Yeah, sure.
Amazing. That's great. I think time is not on our side, but
Okay.
I have to pull in this one question. There's a confusion between NIV fund and a yield fund. Most of your funds, you see NAV fund, then yield fund. Money market fund is a yield fund and others. What is the difference?
NAV funds, yield funds. NAV meaning net asset value. The NAV funds, we have 8 NAV funds and 2 yield funds. For yield funds, we have money market now. And one characteristics of this, the distribution aspect. That if you look at money market, accrues daily, distributes monthly, then compounds monthly, the money market fund. So there's this aspect of this income distribution and the yield of the underlying. So basically it's the source of income or the underlying source of income for the, for those investments. If you look at your money market, the investments they invest into, your T-bills, your, it's rate of return. It's yield, it's what that rate of return is for an 91-day T-bill. And so those are the yield funds. If you look at your GAO funds, the income distribution from the returns and on government coupons. So those are your yield funds. When you look at now the NAV funds, so this is net asset value. And so for them, the return is measured based on growth of net asset value. Why are you speaking about growth of net asset value? Because they have the aspect of trading, capital appreciation. That part of where you're getting your return in an NAV fund is probably you bought a board in Almasi. You bought a board in the premium market, came to the market, sold it at not a premium. And so part of the return for that period, there was the yield, the return from accumulated interest, but then there's also this capital appreciation from trading this board. If you buy shares, if you buy a share, you bought a share at 20 shillings, moved to 28 shillings. So basically the return over that period from these accrued income, or if you realize it, the capital appreciation over that period. So that's the NAV funds. Basically, it all boils down to the underlying source of returns for this or for the fund itself. That's why you classify it as either as an NAV fund, especially for the trading capital accumulation funds.
No.
Then the yield for distribution, income distribution funds.
Amazing. Thank you so much. Now, let me just the final parting shot. What do you tell people who are listening to this conversation? Is that one thing they need to do?
Thank you all for joining in today, and for those who listen later, thank you. I think a big question that we've tried to answer, which has come through so many channels, is why 10 funds? Why do you have 10 funds? And the whole point of 10 funds is because each one fund does not fit into any portfolio. In terms of clients' portfolios, one fund will not fit everywhere. And that's when the whole portfolio building, wealth creation, etc., comes into play. And yeah, so that's, I hope you got a lot of value out of today. We are open for questions. You can always send us an email or call us or walk into our offices, and we're happy to assist.
Okay. It's been a great evening. It's been a great session. Just helping clients and investors understand basically a bit of a behind the scenes on how we deliver these beautiful returns. I know the question that has been in the minds of a lot of investors is how are you getting these returns? And for us, as you said, it's basically one, our strategy in terms of looking for these opportunities, our risk management strategies, our core values that we hold within our investment portfolios, from liquidity management and even how we manage price volatility and all that within the portfolio itself. So these are some of the factors that help us deliver these beautiful returns. Ours is a commitment to always continue, looking for more opportunities, managing these opportunities better for investors, delivering above market returns or beautiful returns for investors. So that's our continued commitment. And we are very grateful for all of investors who have supported us through this journey, for all of them that, all of you who have joined us this evening. And as Priyanka has said, if you have any questions about any particular fund or any particular investment that you want to understand more about, kindly, we're happy to share a response on the same. I know over the next 1 week, even as we said the recording of today's session, some of the queries that have come through various social sites will basically have an FAQ, probably answer as many as we can. So we kindly look forward to that for any of the queries that you may be having. So asanteni sana. We are very grateful for the opportunity they have given us to be your wealth advisors, to be your fiduciary agents, to manage your wealth, to help grow your wealth, and to help you build portfolios, to help you diversify. And our commitment is to continue that innovation. One of our greatest things is innovation, not only in product, but also in strategy. But this night we have spoken a lot about strategy and investment strategy. And ours is always to continue innovation around that space to ensure you always deliver the best for our clients. Asante sana.
Thank you. Thank you so much. Monica, before you give your parting shot, the online investors are asking a few questions.
Okay.
I want you to, do you have any Sharia compliant funds?
Oh, yes.
Then also, what is it there for our children?
Okay.
Do you have funds where we can teach them the ability to grow money and create wealth? And the last one is, probably you can also chip in, and if we have. Now, you are management and all the fees for this fund. We're asking, why can't you just, lump them up into one fee?
Okay.
It's 2% instead of 0.5, just one fee.
Okay, let me start with the last one. You realize the strategy we've come to the market with is not any normal or common strategy. And for us to derive the returns we have seen is because we have adopted consciously the active management strategy. Other fund managers may use the other strategy, which is passive income, mostly maybe because of the funds they manage, the pension money. So for this reason, we as the business owners or co-founders wondered, how can we ensure that this strategy is sustainable? It is by making sure that the teams that are working behind are well compensated. And how do we compensate them? It is by the return that we receive. So that's why we have very low management fees, so that if we don't work hard, then we don't need to earn those hefty fees. And again, we are also looking forward to ensuring that we have the right and the sharp talents. I can tell you, the team we have is a brilliant team. And we will only endeavor to ensure that we give you those kind of returns, if not better. On the junior accounts, so management fees, performance fees, all those are structured actually in the favor of client. If you even calculate our fees, our returns net of all fees, we are still above market returns. So onto the other accounts, the junior accounts, that was part of my parting shot, but it's good it came. So in the next 1 quarter, or in this quarter, we do have new products or new releases that are going to be released out. Part of them is the junior accounts. this is a product that you can be able to invest for your child. And what do we mean? It will not only be for you to invest for them, but for them to also join in the investment space. We will have money market fund space for your child as a piggy bank, and then we will have the other special funds on the back end for you as a parent to use them as the investments towards these children. We will release it and we will give all the details about that. On Sharia funds, indeed, we have two Sharia funds. We have a dollar-denominated Sharia fund, and we have a case Sharia fund. We will release the first fact sheets on these Sharia funds. These are funds that we may want to be able to sit down with our investors and take them through. Yes. Are there other questions? Or maybe CIO, we want to chip in on that.
Yeah, and as you do that, yeah, we keep questions are coming in hot, right? And we have because of them, right? They are wondering whether you do training, financial literacy,
Yeah.
and where do we begin? Come to your office, or we can do it right from comfort of our home.
Yeah. So let me start with just adding on to what Madam CEO has said about the junior accounts. In April, Priyanka and the training team, they did a very beautiful thing. They introduced investment masterclass targeted towards the teens. The turnout was phenomenal. A lot of actual parents were asking, can't you put this training earlier in the holiday sessions? So just to announce to our clients, Teens Masterclass 2 will be here with us in August. From next week, I'll see forms or basically communication on how you can register and book a slot for your teens. It was a great session. It was a great 4-day session, whereby they were trained from your nitty-gritties about investing. Then the tools that were given, from an investment dictionary to a financial planning booklet and all that. So basically, it was quite heavy value addition to the teens that, and a lot have been asking, do we have session 2? How do we come back to this? So Teens Masterclass 2 is coming, and we'll be using this session also now to launch our junior accounts, so that now we are not just training them, but we are giving them the tool. We like giving tools, not just speaking. Let's give you what will actually help you achieve that. So even as we train them about investing and all that, then we bring in the junior accounts, to help you with that. It's a very beautiful product to be within your application. So be on the lookout. Once we publish it, we've been testing it. Very beautiful. Ajo, early birds. If you want to be part of the early birds, kindly shoot us an email. We'll give you an early bird experience of how the junior accounts are. Looking forward to that. In terms of trainings, yes, we do offer a lot of training. We believe in investor education. We believe in having such forums, such sessions that we can speak to our clients just to guide them. But we also realize wealth building is a bit personal. So if any investor would want to book a session with any of our wealth advisors, kindly reach out to us on our clients@avocap.com email. We'll organize a 10, 15, 30-minute session with any of our wealth advisors to guide you either online or physically in the office. As a group, as an employer, as a business, if you want us to come and speak to your colleagues, you want us to come and speak to other the people in your workplace, we also do that. We do corporate trainings, we do executive trainings. We are working with very big brands, some top tier banks in the nation, some top tier manufacturing firms in the nation, just to offer them these investor training, to their workforce, to the executives, to their board members, to the different cadres within their workplace. So, we can do that for you. So kindly reach out to us at clients@avocap.com and we'll organize this for you.
Amazing.
Yeah.
Amazing. Any other addition?
Priyanka can talk about our app.
Oh. Our app is quite seamless. The whole point of our app and our portal was to make it a very paperless journey for you. It's quite simple. It gives you everything you need, from topping up to investing to selling your units to withdrawing your funds to switching between funds, adding your beneficiaries, etc. And yeah, it's we have a lot of training sessions as well on how to use our app, and a lot of guides on how to do that as well. And you'll be able to find that soon as well.
Super. Any other question?
You're done with the question.
All right, all right. All right, let me give my parting shot and just first of all take this chance to thank you, our investor, our potential investor, that person who is sitting there wondering, is this real? Are these returns real? To just thank you for logging in for this webinar. Thank you also for the questions you present. I think that's what mostly we were tackling. We bulked them up and that's what we were able to answer. It is by your confidence that you have taken to invest in us or with us that we am here to just tell you thank you. With assets over 3 billion and more than 10,000 clients, we honestly don't take that for granted. So we want to thank you, and we want to also tell you that we have the solutions that you are looking for towards this journey of creating wealth. We will sit down with you. You're most welcome to our offices, as Wilson said. Come to our office. We sit down with you. We are able to evaluate your portfolios. We do portfolio restructuring. We do portfolio optimization. We also help you create portfolios from the beginning. That said, we also have a private wealth desk where we offer you a leveled up kind of wealth management services. And we will sit down with you, be able to have meetings with you on a quarterly basis just to review, are we heading towards your goals or we are deviating? So kindly reach out to us. We are here for you, and we are going to help you in all the investment needs you have. Let me also take this chance to thank you, Alex, for agreeing to come and moderate this panel. I think it was important for us to have an outsider coming to tell us what are those questions people receive. And I know you received them firsthand. So I appreciate your time. Thank you, my co-directors and team, for just braving up, showing up every day, and also to the whole team, Avocap, the whole crew here, and everyone out there. I just want to wish you a lovely evening, and thank you so much for logging in. Thank you.
Okay, thank you.